Today, Saturday the 15th of August, 2026, the biggest story in crypto and American politics is not a price move. It is a banking license. Late on Friday, the Office of the Comptroller of the Currency, the OCC, granted preliminary conditional approval to World Liberty Trust Company for a national trust bank charter. That company is tied to World Liberty Financial, the Trump family crypto venture. This is not final approval, but it is a huge step. The proposed bank would issue and manage the $1 stablecoin, reported at roughly $4 billion. A presidential family business moving into federally regulated banking is extraordinary, and the word conditional is doing a lot of work here. To understand how we got here, look at what changed in the last 24 hours. The OCC, part of the U.S. Treasury, cleared World Liberty to operate as a national trust bank, not a full-service commercial bank. Trust banks focus on holding and managing assets for clients, which fits a stablecoin issuer that must safeguard dollar reserves. The approval is preliminary and conditional, so the company must still meet specific supervisory terms. Those terms are not fully public, but they almost certainly include capital buffers, liquidity rules, regular audits, and anti-money laundering controls. The timing is sensitive because the acting regulator was appointed by President Trump. That is why this is framed as a governance test, not just a business story. Now think about the immediate impact on the stablecoin market. Tether's USDT and Circle's USDC already handle billions of dollars in daily flows. A federally chartered rival with a Trump brand could redraw that map, because a national trust charter offers something offshore or state-licensed issuers lack: direct federal legitimacy. If $1 operates under OCC oversight, it may become more attractive to institutions that want regulatory comfort. It could also reduce World Liberty's reliance on partner banks for custody and payments. But this cuts both ways. Rivals and consumer groups will scrutinize every reserve report and every conflict of interest. For ordinary crypto users, the practical effect is more choice, but also more political noise about whose stablecoin is safest. Where does this go next? The company must satisfy the OCC's conditions before the charter becomes final. That could take months, and approval can be pulled if standards slip. The next major test is whether World Liberty Trust seeks a Federal Reserve Master Account, which would give direct access to central bank payment rails. That decision is far from automatic and politically explosive. Expect pressure for full disclosure of reserve assets, because a stablecoin is only as credible as what backs it. We should also watch whether other crypto firms now rush to apply for trust charters. If they do, the OCC's conditional yes could become the template for a wider regulated stablecoin industry in America. So the clear takeaway today is this: a Trump-backed crypto venture has won a conditional bank charter from a federal regulator, and that changes the floor under the entire stablecoin market. It is not full permission, but it signals that crypto and state power are now deeply intertwined. The real story is about who gets to create dollar-like instruments in a digital economy, and under what rules. The next few months will reveal whether this charter is a genuine step towards safer stablecoins, or a political fault line.